Friday, June 23, market analysis, Stan Ehrlich. You know I start out with the stock market indexes every day, and the S&P 500 in particular, the spider specifically, and that is SPY. Today, we have another new low since I started talking about the indexes topping out about a week ago. And I opened the 1 minute for a moment, wrong chart, going back to daily data. So as the market a week ago started to get overbought and left a small gap behind for a day or so, but more importantly, a gap behind from the beginning of June 1st and 2nd, that gap is going to be closed if we get down to 423. And I expect that that is in progress. But we have just now, today, hit the first level that there might be a good bounce off of. Yesterday, it came close and closed a little higher. But this morning, we actually opened below yesterday's lows and started to bottom out a little bit. And we have a rally. I'm a little late recording today, 10:15, what time is it? 10:45 California time. So there's still over 2 hours of trading left. Now we are still $1.82 lower on the day, a little almost $2, even though we're close to the high. We should have, and we did, come back up to yesterday's low, plus a bit more. And that's for all of the indexes that opened below yesterday's lows, which is the Russell 2000 and the DIA. And I'll get to the QQQ in a moment, and the others. But the spider rallied, closed the gap, kept going a little bit more. I think we may have seen the high of today, just 10 minutes ago. And the reason is the DIA, until 10 minutes ago, still have had a little bit more rally to get up to the low of yesterday, which is very early yesterday morning, just like this morning, actually. And the rally didn't go too far for very long. It hasn't gone too far, and we've gone mostly flat here since the first hour or so of trading. And the gap is now closed a few minutes ago, literally almost exactly to the tick. And we're slipping a tiny bit, hardly anything. So we need to start dropping off below some of these minor lows, like below 337.60, and of course, especially below 337.07 in order to challenge the low of the day and perpetuate my bearish, modestly bearish expectations for maybe another week or two, and it might be a lot less than that. Today's low in the DIA, excuse me, bounced off of a support trading range at the low. The low of the day in the SPY did almost exactly the same, came very close to some support trading range on the daily SPY chart right here. And I will zoom in, so to speak, so you can see it almost touched the red zone. And that's the beginning of some support. The gap is closed when it gets into that little blue area at the bottom of the blue area. Now, the QQQ has a lot of similarities, as I've said for the last couple of weeks now. Overbought conditions up against a resistance area, stop the market. We've seen now 1 day down, 2, 3. Yesterday was up a little. And so far, even at the high of the day, almost at the moment, we're still lower by $1.96, almost $2 on the QQQ, which has not gotten below yesterday's low like the DIA did already, and the spider did already, and the Russell 2000 did already. So today, the Qs are hanging in there a little bit better, but still lower on the day. Right now, down $1.80 spider, down $1.30 on the DIA, and down $2 exactly in the QQQs. The Russell is down $1.53, now does not have a gap anymore. All of the gaps that had happened on the opening have been closed with little rallies, either a little while ago or earlier this morning. Done. I think we're going to start slipping and close on a softer, lower than right now, close today, and keep on going down. I want those gaps to be closed below the market. And then the Qs, I don't think I mentioned where that is. yet, and it needs to go down to 333 1/3, 333.3, in order to close the gap on the the QQQs. And that is a ways down. So I'm a little bit concerned that this gap may not get closed on the Qs, but the DIA and the S&P gaps are not that much lower, so they're a little bit more likely. So we'll see what brings us in the next week or two as far as this dip is concerned. I may have to start being bullish sooner, and the gaps are possibly not going to get closed, but so far so good. I could call the turn before it happened, and it's happening. So now I'm trying to keep it going. Futures, futures, futures. Commodity futures. I was a commodity futures broker for 35 years. So the E-mini is the first one, and of course, besides being a futures contract, is the S&P 500. So everything I talked about here on the Spider is the same basically for the E-mini, except the trading hours are different. So I've gotten a different signal sometimes. I also want to mention that all of the stock market indexes provided me with fantastic ER buy signals on October 13th. It was a landmark day, and I started talking about the October lows a month or 2 months earlier, way before they happened. And then magic, they happened right smack in the middle of October. And boy, was that a great day. Real happy. Next chart. Interest rate futures, you know I'm bullish. I'm looking for new highs for the whole damn trend for many months above 134, 135 area soon. It may take another month or two, but I'm expecting it to perpetuate through the most of the year. The bull trend line in the bonds is held for the last 3 weeks or so very, very, very nicely. Look how many times it bounced right off of that line. So today, an up day, we actually managed to poke our head into new high ground for about 2 or 3 weeks, but it's not what I would call a breakout because it's not staying there at the moment. I would need to close there, and that would mean closing at 128.20 something or higher. Certainly above 129.17-ish, because that's the highest high since the low, which was oversold, and at the trend line. So I'm expecting higher levels, and we may be having these prices exist for the last significant time for many months to come. Looking for a real strong move soon. Now, 10-year notes, very similar. Didn't quite reach the trend line, a little higher on the day, and not acting quite as strong, quite as fast. But I think the story still applies pretty much across the board. The prices are simply different. Next, energies, crude oil. Came up to some resistance the last couple of days, dropped off sharply yesterday, dropped off even more today, and is a little lower on the day at the moment. I'm looking for a move down below 65 for a major bearish longer-term breakout. I'm bearish, looking for a lot lower. Next, heating oil. Same kind of story. Gigantically important support line at 2.14-ish. Closing below that will be a major bearish breakout. I think we've had our rally high, and we're about to do exactly what I'm expecting, close below 2.1 something soon, the next few days, next week or so. Next is natural gas. Hey, we had a great sell signal 4 days ago, 3 days ago, and so far, not following through like I would hoped. I need to have it turn back down immediately and not start to get above 2.793. That would cause the sell signal 3 days ago to be null and void and wrong and lose a little money. If you were inclined to believe the sell signal a few days ago and able to sell short now at these prices, I have to say the risk factor, because my stop is going to be the same, would be very small. It looks very gutsy, but I think that's not a stupid thing to try. What have you got to lose? Very little. What have you got to gain? Whoa, major move, major move. Long-term bear trend. We could be starting the move down for a new long-term bearish breakout. Next chart. gold, silver, platinum, then copper. We have a brand new buy signal today in gold. It's not happening exactly where I thought it might. It looked like the lows today are not particularly at a spot I would have guessed as a support level and or a turning point, but the bullish engulfing is happening in oversold territory, and that is my golden grail. That's the buy signal I want. The last two buy signals didn't work particularly well, a little bit, but not much. Maybe this one's going to do much, much better. We'll have to see. These sell signals worked fantastically. That buy signal was the bottom of the break after that sell signal and the beginning of a very big move up. The long-term trend is kind of still up, but the trend line I had drawn is broken. I may draw a brand new line across today's low, starting at the same spot way back here on November 3rd of 22. We'll see. Next chart is silver. So we got the bottom, March 10th. We got both highs on a double top. Both of them gave me sell signals the day the market turned. The last buy signal was very good. It lasted 2 or 3 weeks and had a nice rally. I'm now oversold. That means the market should start going up soon. And if that's true and it does start rallying, I'm going to draw a line in right now. I forgot to do this, so I'll just draw it for you. It's going to drop off from this low. Okay, that's not what I was expecting. I thought it might be a little higher, but the long-term bull trend line I just drew is still a little bit lower. Not that that's super important, but at least we got the line in now. And I think it's going to turn up, and I think it's going to turn up so we challenge at least 24.5. Next chart. Platinum, also oversold and very, very close to a previous low, which was a bullish engulfing on February 27th, the bottom of the bear move and the beginning day of the bull move. So support, oversold conditions, and pretty significantly so. 15 is pretty low. I think we're about to turn back up again in platinum also. Don't see any possibility at the moment of a bullish engulfing ER green buy signal, but I would not be surprised if it happened in the next few days. Next chart is copper. Got overbought in a resistance area and it's slipping a little bit, but the longer term trend is up. So I'm looking for another buying opportunity a little bit lower, not much, and then a move to new highs higher than yesterday's high. Next, grains, soybeans in particular, got overbought. Started to drop down yesterday, dropped down a little bit more today. At the moment, it's hardly lower on the day, but a small amount. I think it's got a little bit more downside probability, but the trend here at the gigantic support area holding very accurately is a broad double bottom support level. And we just almost stayed in new high ground 2 days ago. So it punched new highs slightly, but couldn't hold it, but it was overbought also. So here's the dip that one would have expected. Is it finished? Are we going to get a little bit more of a dip? I think that's possible, but I'm bullish. I'm expecting it to turn up and close above 1521 within a week or two, pretty soon. And it could be real soon. Next, got overbought, bottomed out in an oversold condition with divergences, new low in price, but not a new low in the indicator. And heading up today sharply, looking for a move to test at least 60 and probably up to about 64.25. That's soybean oil. Next is soybean meal. Got overbought, dipping down for the second day in a row now since the rally high in overbought condition. I'm going to pass on the rest of the comments. The longer term trend is up, but I want to see what happens in the next day or two. Next is corn. Very, very overbought. Got up way up there in the RSI range, highest levels for many, many months. Came down some yesterday and way sharper lower break today, and bounced off so far a previous bear trend line that was broken, and we're hovering just above that. So maybe that overbought condition is now resolved completely, and we could start rallying again. We've had new highs for many months and barely on a closing basis. I think this correction is normal, and we're looking for higher prices. Next, wheat. Long-term trend is down, rally high in resistance, stopped cold turkey yesterday, day before basically, and starting to dribble back down some. I'm looking for a little bit more of a downside correction. Next, live cattle, sell signal on top of the market, great signal. We have 2 days ago the lowest low since the top that was a ER sell signal on June 7th, and a little bit of a bounce for a day or two. I'm expecting new lows real soon and a move down to 163 or even a little bit lower within a week or two, very, very soon. Next, live hogs. Yesterday, ladies and gentlemen, I said brand new buy signal, a sell, brand new sell signal, red bearish ER sell signal. Today's rally high is almost the high of the day where we sold short, ER3. We're currently trading below yesterday's close with a profit, and we made lows lower than the signal day, which was just yesterday. I'm looking for a move down at a minimum to about 83 3/4, very possibly down to 74, and I will not be surprised to see prices lower than 74. This is a longer-term bear market in progress. It double topped out months and months ago at 118. So around 89 at the moment. I think we've got a lot more elbow room on the downside. Next, OJ and the softs or the exotics. OJ just might be forming a top. I'm going to hold back on an opinion. I'm not quite sure that I can say something particularly great at the moment about OJ, so I'm going to pass. Cocoa, bull market, very strong, got overbought. Correction expected, started 3-4 days ago, still probably in progress. I would not be surprised to see it dip back down to 3,030, and that's exactly what I'm expecting. It might be a tiny bit higher than that, 3,070-ish, because that's where there's a little trend line and a beginning of support. So mildly bearish, very short term, a few days to a week or two, and then up more, higher. Next, cotton. Well, it's a new low for a few weeks, but not any kind of a major downside breakout yet. Looks like we're working toward that goal, and a move below 73.5 is going to be a whopping bearish breakout to the downside. And oh yeah, there's also a little gap way over here in last November to consider closing. But I don't think it's going to stop there. I think it's going to close that gap, and that's a major breakout in the process, and keep on going down. So I'm looking for a test of 66 to 70 and lower probably after that. We caught the bottom right there, green and ball engulfing, the big break. Perfect, fantastic. Next, sugar to sweet. I talked about the double top several days ago. It's looking more and more likely. We are now dropping quickly for the last 2 days, today and yesterday, and already pretty close to a downside breakout. Closing below 2380 would be a bearish breakout of a double top formation and produce a minimum move down of approximately 21.5 minimum downside objective. Since there's nothing there that interests me, I think it's a little more likely to get down to about 2035 and even possibly lower. We're not oversold yet, so I'm not going to be surprised if it's early next week. Today's Friday, and we're back to the E-mini. You guys have a great weekend. Talk to you on Monday.